All right, everybody, it's me, Gregory Mannarino. Number one, I apologize for this video being out late. This setup just isn't working, and the video would not upload on YouTube, so I'm redoing the whole thing. Anyway, so this is my post-market wrap-up on this Thursday, May 7th, 2020. Stocks finished higher across the board. However, they cut their gains in half, more than half, on the day. Three things occurred that we must pay attention to here. Very, very important. So, number one, the 10-year yield fell 7 basis points in one day today. That is tremendous. What does that mean? That means, for some reason, cash was leaving the stock market and going into the debt market. When cash goes into the debt market, the 10-year yield drops. That is generally the market smelling something. Like, it's not even sure what it is yet, but there may be something coming down the pike, maybe tomorrow, the next day, a week. But there's a few other things we need to look at here. Crude oil today was up 9%, over 9% at one point today. Not only did we give back, or the market give back, all those gains, we went negative. We finished the day negative. That put pressure on energy. That put pressure on the financials. Not good. It's not good to see the 10-year yield drop 7 basis points and crude not only erase its gains on the day, but go negative. Number three, cash made its way into the safety of gold and silver. So again, we had a market here that was much higher during the day, then couldn't hold its gains. As the 10-year yield dropped, cash was going into the debt market. Gold and silver, nice gains. Cash went into gold and silver. And crude oil erased all of its gains and then went negative on the day. This may mean we're seeing a shift in a major dynamic with regard to the market. Again, risk on, stocks go up, 10-year yield goes higher, cash comes out of metals. Risk off, cash goes into the debt market, cash goes into metals, and comes out of stocks. So this may mean that this market is getting set up for something. Now, if you subscribe to my newsletter, hint, there's a link in the description of this video. Earlier today, you received an email from me. It said specifically that we need to be watching these dynamics play out. That's number one. Number two, that this market, again, may be setting up for something. So you are already ahead of the curve with regard to this. Look, the situation is pretty simple. It's not real. There's no other way to put this. The market today exists in fantasy land. Has no bearing on reality. It's just not freaking real. I don't know another way to put it. We are taking advantage of that. If you're a stacker, you know it's not real. You're putting your cash into real things, hard assets. You understand? If you're a trader like me, you're trading the faker. You're trading the epic amount of debt that is being piled onto the back of our country, of our citizens, and the world, of unborn children. This is a horror show of epic proportions. It's all being faked to try to keep the illusion of the market real. This is the Federal Reserve, the New World Central Bank taking over everything, issuing in their final solution, the lender, buyer, and owner of everything. It's pretty simple. That's what they are doing. And you can only imagine. Let me say this to people. We have not seen anything yet with regard to the debt explosion that we are involved in right now. It's beyond parabolic, and it's speeding up. So just to keep the fake environment, because this is an election cycle, the president is playing a game here with the Fed to keep this propped up in any manner possible. And it's not just him. If you look at every single election cycle, every one without exception throughout history, every president looking to get elected again has their Federal Reserve or has the Federal Reserve, has the banks prop this up. But this time is epic. We've never been here before. The effort going in to prop this up is so off the Richter scale. But again, it allows us to understand what we need to do. And that is bet against the debt, become your own central bank, hold hard assets. It's just so simple. It's really, really simple. Okay, let's talk about a couple of other things. Again, I already talked about gold and silver. Nice gains today. Again, there's no bearing on reality. They should be multiples higher on where they are. I already went over the debt market. The 10-year yield dropping here with crude giving up all of its gains. Not good. Let's talk about cryptocurrencies. Bitcoin was a shade under $10,000 today. I think we pulled back a little bit off of that. With regard to, people keep asking me, okay, Greg, we're near your target. Should I pull profit? Look, it's never wrong to pull profit. If you got in to Bitcoin, when I said to buy it at 3,700, at 3,700, I said it was going to 10,000. If you got in at 3,700 and you're near 10,000 now, should you pull profit? Well, you make up your own mind. You pretty much destroyed it. You've more than doubled your money, way more than doubled. So you tell me, should you pull profit here? How about this one at 7,000, Bitcoin 7,000? Just a couple of weeks ago, I said again it was a buy. So if you bought it at 7,000 and now you're at near 10, you still have a pretty damn nice profit here. Do you want to hold on to it and hope it's going to go higher? It probably will, it might. Or do you want to lock in a profit? It's up to you. It's up to you. You know, it's kind of funny. At Bitcoin 3,700, I was called an idiot. I was called an imbecile, and I don't know what I'm talking about when I said it was going to 10,000. At 7,000, Bitcoin 7,000, just a couple of weeks ago, I got called an idiot, an imbecile, and I didn't know what I was talking about. At 7,000, when I told people it was going to 10. So for those of you out here who called me an idiot and an imbecile, I hope you have the human decency to say, hey, Greg, you know what, I was wrong and I'm sorry. If you think you're smarter than me, fine. But you don't need to call me names and tell me I'm wrong and I'm an idiot and all this stuff like that. Because again, who is proven to look like the idiot? Maybe those of you that said, I was the idiot. You see how this works? Be very careful when you call someone out like that. Because if you're wrong, and all of you were, who said I would be wrong, it just makes you look bad. All right, look, with that said, a change in dynamics today in this market. We watched cash go into the debt market. 10-year yield dropped 7 basis points. That's significant. We erased gains in crude oil, went negative. Stocks could not hold their gains. So this could mean the market is about to do something. What? In my opinion, the stock market needs to give a little back here. We had a rip-roaring April. The stock market put on historic gains. We haven't seen it since 1987. Okay, we need to give back a little bit. It would be bullish for the market to give back a little bit here or consolidate for a while, stay where it is. But the fact that we saw the 10-year yield drop like that and we saw cash knee-jerk into the actual safety of metals, that could mean the market's going to drop. And I would welcome a drop here because that would be bullish. Nothing goes up in a straight line. April, pretty much straight up. The 7 days of this month, we've pretty much gone straight up. We could use a drop and then another move higher. That's how markets work. I think you understand that. All right, so with that said, I think I covered a lot of important things here, people. You know what to do from every angle, and I got you covered. Speaking of that, you see this? TradersChoice.net. This lovely website. There's all kinds of free stuff here for you. All kinds of free downloads for you. Take advantage of it. If you're not, you're missing out on a lot of stuff. Speaking about missing out, Get my newsletter. Link in the description of this video. I will keep you on top of this market from an inside perspective. All right. If you're not signing up for my newsletter, I don't know what you're waiting for. It's free. All right. I'm out of here. Love you a lot. Share the video. See you in the morning.